Hello, learners. Hi, how you all doing? I hope you're all doing good. In fact, great. So, in this video, I am going to discuss about one of the most interesting topics of your Group 2 Advanced Accounting. So, this is the chapter of liquidation of company. So, how to close down the company and how will we be accounting for the same in this video. So before I go any further ahead with liquidation of companies, I have some news for all of you people, for all of you early birds who written your CA foundation exam, awaiting your results. Way before your result for CA foundation is announced, Yashas Academy is launched an early bird batch on the Unacademy platform. That's Excel with Yashas batch for Group 1 examination that's supposed to be happening in the month of May 2023. And to start with, you'll have accounting classes from Mayur sir, law and tax from Vijay Raja sir, accounting stats from Ravikant sir, and costing from Dhananjay Bhavi sir. I will also be taking part of the syllabus of accounting in this particular batch, but my class would come up little late, like post October or so. And the right now the tentative schedule for July and August is here. You guys can make yourself aware of the same, and you get the best, usually the way you get from the batch, and you know the advantage of taking an academy plus subscription. You get live interactive classes, recorded backup will be available. With one subscription, you get all the educators' notes, the soft copy or the PDF material will be available. But if you take up iconic subscription, you get additional advantages of printed study material available at your doorstep, doubt solving sessions at regular intervals, one-to-one live mentoring, and lot more. So what are you waiting for? Take up your Unacademy subscriptions today and avail 10% off by using the code YESHAS, which is YESHAS. So hoping to see you all in the batch. And what are you waiting for? Chalo, let's get started with liquidation of companies. Okay, chapters of ESOP, employee stock option plan, buyback with differential rates, along with amalgamation, internal reconstruction, and liquidation. All of these topics put together will constitute 33 to 38% of the marks as usually given by ICI's weightage portal. But I would tell this at upfront because everyone asks this question, sir, how much marks will we get from this chapter? I don't know, it's become a routine norm from you people. The moment the chapter is started, rather than asking what is the context with which we should learn this chapter, why should we learn this chapter, all those things aside, the first and foremost question that I am hearing from the learners community in the modern times is, sir, how many marks will this chapter come for in the exam? But I've answered your question, I've told you the weightage, but don't really go behind this weightage, especially for a fact that 33 to 38% is ESOP, buyback, amalgamation, internal reconstruction, and liquidation together. So each chapter, how much does it come, is not really prescribed by ICI, and they can give a question or they can completely skip a question from this chapter. But however, I have done my bit of research and I've given each attempt which question was from this chapter and how many marks was it for. So this chapter of liquidation alone will come to about 10 to 15 marks from the syllabus. 10 to 15 marks in your examination. And May 18 May it was for 5, November 18 for 10, May 19 for 10, November 19 May it had come for 5 marks, and November 2020 May 5 plus 5 10 marks. Lottery. Abba. Congratulations, brother. Congratulations. If you have read this chapter. 21 by 10 marks. So this is the weightage in each attempt and how much marks does it come for. So after that I am not updated. I'll soon update it and then share this PDF with you all before you write your exam. So that's the each attempt how much marks this chapter has come for. So if it is 10 to 15, don't you think really like okay 33 to 38% may 10 marks has come from liquidation chapter only. So do you really think only remaining 23 marks or what is remaining 23 marks come from ESOP, buyback and amalgamation as well as internal reconstruction? So not really. So that's the reason I say don't go behind this 33 to 38% weightage. Things aside, what is expected from this chapter and what are the things that you need to know from the chapter? From this chapter, you need to know the preparation of statement of affairs. How to prepare statement of affairs is the first and foremost thing that you need to know. You also need to know how to prepare liquidator's final statement of account along with B list contributories preparation. So these are the three important topics that you need to learn based on which questions also come in the examination. So in this series, no, I will be covering all of three. I'm not going to do just brief up of one part and then leave. I will do how to prepare statement of affairs. I'll teach you how to prepare liquidator's final statement of account as well as B list contributories in this series. Definitely may not be everything in one video. If it happens, good. If not, I'll definitely come back and then do another one and then cover the rest of the topic for you. Yeah, great guys. So without wasting much time, let's get started, shall we? To start with, we'll always start with statement of affairs. See, I've seen quite a lot of times learners starting with liquidators minus statement of account. I've seen a lot of students starting with liquidators minus statement of account, or few of them usually start with the topic of B list contributors because it is easy to do or interesting to do. But I'll tell you, you cannot do something because it is interesting. You should do it in the right order. It is interesting to wash your hands only before what do you say, eating food. So will you wash your hands only before eating food and not wash it after? No, you have to wash it both ways. So the right order is very important. It's not just what you like to do, but it's a what's right to be done is also quite important. So you should always learn statement of affairs first, then you would have to learn liquidators minus statement of account, and only after that you need to learn b list contributors. You can't say that I learn b list contributors first, then liquidators minus statement of account, then I'll do statement of affairs. Sir, why are you saying that? You would answer the question yourself. After I teach you the process of statement of affairs, the process of liquidators final statement of account, how are they connected and how are these two connected to B list contributors. So I'm going to tell that to you and you will decide, sorry, you yourself will answer as to why is it important to read it in this particular order. Now first, let's start with statement of affairs. So before I start with statement of affairs, all I want you to know is liquidation chapter mein what is happening is the company is getting closed. What is happening to the company? Any company is getting closed. So whenever you say company is getting closed, it is nothing but death of a company. Am I right? So when you talk about the death, that death can be two forms. Either it can be a murder or it can be a suicide. Either it can be a murder or it can be a suicide. So what do you mean by murder? Murder is some external person killed the company. For instance, we can say court order. There's an order given by the court for liquidation of the company. Now the question is, why would the court order the company to be closed? Maybe because creditors and suppliers together appeal to the court saying that we have not got our dues from the company and we really think that if the company continues, they would not even pay little money that they have. They would go into more deeper losses. So if such a complaint is raised by all the creditors and suppliers to the court, then the court might just accept this and then court might force the company into liquidation. Or the second case is suicide. Suicide is members, all the members, shareholders collectively sit and then decide in their general meeting, this is not a good idea to continue the business, so let us close the company. So they might come to such decision. So whenever the company's members come to such a decision, that's what we call as suicide. This is just a layman term for you to understand. So either of the case, the company is going to get liquidated and we are going to learn how the company will get liquidated. And now, in the process of liquidation, whether it is a murder or it is a suicide, first thing that should happen is a board meeting. What should happen at first? There should be a board meeting. Sir, what is board meeting? All the people who are bored of the business sit and then discuss. No, that is board meeting. Sir, really? Not really. So when I say board meeting, all the board of directors will sit and discuss the dissolution plan. See, if it is a court order, then the board meeting has to happen and then board has to give a resolution as to how the liquidation will happen to the court. Or if it is happening by members voluntarily, then members will say what will be the status of liquidation. The question will be raised to the board of directors. Board of directors have to come about with a draft as to how the entire liquidation process will happen, and that case may again there will be board meeting. So either it is murder or it is suicide, there will be definitely a board meeting. In this board meeting they need to come about a paper which they are going to submit to the court. In the case of voluntary or in the case of court order, they need to submit this to court saying that this is how the entire liquidation will be happening. So this is an estimation statement. If in case liquidation happens, how did it happen? What assets are we going to sell? At what price? How much are we going to realize? How much liabilities will be settled? In what order? Who will receive how much? Who will not receive? Who will receive more? Who will receive less? All of these, all of these will be prepared in the way of a statement, and that statement is statement of affairs. What is the statement? I hope you guys got this. So statement of affairs is such a statement which is prepared by the company to be submitted to whom? To the court whenever the company is going on liquidation. This statement most importantly is prepared on expected basis, okay, not on actual basis. Please remember. So what is that I'm trying to tell? This is prepared on expectation basis. So basically it is all estimation based. It only has estimates. It doesn't have any real figures. It doesn't have any actuals. It is not on actuals. This is not on actuals. Actuals can be something very different only. It is not a real life scenario. It is a scenario which is expected to happen. So if the assets are sold, what will we realize? What order? How much money will we get? How will we distribute? To whom will we pay? When will we pay? Who will not get money? So everything is done. So that is statement of affairs. You guys get this? Once the statement of affairs is ready, then if it is a voluntary liquidation, then the board of directors will appoint. If it is the court's order, court will appoint. Whom will the court order? Court will appoint a person by name liquidator. Will the court appoint? This guy whom you see sitting here is Mr. He has so much of power to power and heat that he can convert any solid asset into liquid item. Basically, he can sell assets. So this person is a liquidator. This liquidator can either be appointed by the board of directors only, or he can be appointed by court of law. This person will receive two documents. How many documents will he receive? He'll receive two documents. Let me tell you. Document number one, he will receive appointment order. Appointment order in the sense he is now appointed as the liquidator of the company. He is in full charge of the company. Along with this appointment order, he will also get power of attorney. Actually, three documents because I had not included power of attorney. Power of attorney to say that he is the person who's whole and sole responsible of the company now. He can sell the assets of the company. He can pay the liabilities of the company. He can enter into contracts on behalf of the company. You can cancel the contracts on behalf of the company. He can make payments and receive money on behalf of the company. He can, what to say, he bears complete responsibility for all the company's actions. So this person is Mr. Liquidator. Who's he? He's Mr. Liquidator. And this Mr. Liquidator, along with the appointment order from the board or from the court, along with the power of attorney, he will also receive statement of affairs. Yes, the same statement of affairs what we discussed here to have been prepared by the board on the point by what to say on nomination by the board. The accountant of the company will prepare, no, that will be handed over to Mr. Liquidator. This is an expected statement. Based on this, whatever Mr. Liquidator will do is he'll keep that statement of affairs as a basis. He will sell all the assets. He will sell all the assets and he will pay all the liabilities. So it does two things. Number one, he'll sell all the assets. Number two, he'll pay all the liabilities. First, he will sell the assets. He will receive the money. He'll use that money and then pay all the liability holders. So that's what it does. So he basically executes that expected statement into reality. And this guy, after he gives all of this, he will prepare one document. That's what we call as liquidator's final statement of account, LAFSA. Liquidator's final statement of account, LAFSA. Now if I were to tell you what exactly is the difference between LFSA and statement of affairs, it goes like this. Liquidators final statement of account. The first and foremost thing is statement of affairs is prepared on expected basis. It is not on actual basis. It's an estimate. It is prepared on estimated basis. It is on actual. Meaning, here when we prepare statement of affairs, we are just dreaming. What price can I sell my asset for? How much money will I realize? At what price should I settle my liability? You're dreaming. Whereas in liquidator's final statement of account, you literally sell the asset, you receive the money and you write it. So the reality and expectation may there can be differences. And this is at the proposal stage. Meaning, at the point of time where the company is thinking, should we do liquidation? If we do, who will get how much? They're still giving it a thought. At that point of time, they prepare statement of affairs. Whereas, on a realistic scenario, after liquidation, I'm going to say on liquidation or after liquidation, we prepare liquidator's final statement of account. Yeah, so this is prepared on liquidation. On literally when the assets are sold, we enter this. This is like a receipts and payment account. Liquidator's final statement of account is a receipts and payment account at the time of liquidation, at the time of sale of assets, at the time of settlement of liabilities. I hope you guys got this. That's how it works with regard to statement of affairs and liquidator's final statement of account. And yeah, so there are quite a lot more. But if I tell them now, you wouldn't be able to appreciate it much. We'll jump into statement of affairs. We'll jump into liquidator's final statement of account, and you'll understand it better. Got it, guys? So now I hope that you guys have a fair understanding as to what is the difference between these two. If you have any doubts on this topic, you guys can feel free and then drop in a text to me on my what to say on my profile, or you can drop in a comment to this particular video, and I'll definitely reply to your query whatever you posted. So chalo, let's deep dive a little further and then understand statement of affairs first. So because, okay, now let me tell you, because we first prepare statement of affairs, give it to the court. Once the liquidation is approved and liquidator is appointed, when he sells the asset and then pays the liabilities, that is when we prepare liquidator's final statement of account. And this is the reason, my friends, why you should always do statement of affairs first and then do liquidator's final statement of account, and after that B list contributories. Now you are wondering about why B list contributories at the end, so that I'll answer it to you in little time. Okay, chalo. Let's now start with statement of affairs. So what is statement of affairs? It's a statement. It's a statement, not an account. And this is prepared on what basis? On expected basis. Or estimation basis. And this is not prepared on actual basis. And who prepares it? The accountant of company. Or they can hire an external consultant to prepare it. So who's it? Who prepares this? Accountant sitting at the company will prepare it, and that will be submitted by the company to court of law, which will enforce us to submit it to our liquidator. So who's this? Mr. Liquidator. Got it? Chalo. Let us go a little ahead. And this will have several lists. So statement of affairs will comprise of what? Lists. So if you guys would want to take a small screenshot of whatever has been discussed, I can share this file with you all. You can just request it to me, and then on that official Telegram channel, if you drop in a text, I'll share the file on liquidation to you all. So it's a very detailedly done file. Lot of images. In fact, only images to make you understand the entire concept. If in case you see, read through the PDF, or if you see the entire video, you'll understand the significance of it. And I'll make this chapter so nice that you don't have to revise this chapter the day before exam. You can straight away walk into the exam without revising this chapter the day before exam, still crack the answers. I'm going to put it so deep into your mind. So trust me and then sit back. Okay, so as I was mentioning, this statement of affairs comprises of several lists. What is it? Statement of affairs comprises of several lists. What lists is this comprising? So list A, B, C, D, E, F, G, H. So these are the lists it comprises of. Now we'll discuss each of the list. So list A, what does list A deal with? Let us tell little in what to say bird's eye view before we go in depth view. List A and B together talk about asset. List A, list B. Together they talk about asset. A talks about assets not specifically placed and B talks about assets specifically placed. However, if I have to tell you in general now, A and B both talk about assets in total. Now, when it comes to list C, it talks about who do you see here? I got scared because someone bursting crackers. So list C talks about what to say government and tax authorities to whom you're supposed to pay money. So here I put the picture of our Madam Finance Minister, and then laborers because the money that you need to pay them, and employees. So all of this together, the name that we give is preferential creditors. So you would sell all the assets and then you start paying liabilities. When you start paying liabilities, the first and foremost preference is given to preferential creditors. So that's what I've just told you. So list C is preferential creditors. List D, what we have is debenture holders. D for debenture holders. And list E may, the person who's in doubt here is an unsecured creditor. He has lot of doubts whether he'll receive his money or not. He is an unsecured creditor. And after that, when you pay all these outside liabilities, preferential creditors, debenture holders, and unsecured creditors, among the owners of the company, preferential holders will say, boss, me, first you should pay me, then anybody else. And the one who runs in for money before anybody else, the one who runs in for money before anybody else is our preferential creditor. Sorry, preferential shareholders. And at last we have equity shareholder. He is like seeing so many people are there in the queue and he's at the last end of the queue. And our equity shareholder will be seeing in the what to say binocular or telescopes. Will I get money? So many people. So much of money, so many people. Will I get money? So he's seeing from far and distance. And this person who sees from distance is our equity shareholder. Is our equity shareholder. I hope you guys got it. So the order stays like this. First you would have to sell assets, then you would have to pay liabilities. When you sell assets, that will be comprised in list A and list B. List A and list B together talks about assets. List C say list G, we start paying money. List E is for preferential creditors. List D is for debenture holders. List E is unsecured creditors. List F is preferential shareholders. And list G is equity shareholders. And whenever you sell these assets and pay off these liabilities, if you are short of money and you can't pay your equity shareholder, that will be deficiency. If you have more money left after list F and that excess money will be paid to equity shareholders, that's what we call as surplus. And at list F stage mein whatever is happening will be arrived at in list H. Is there deficiency and shortage to pay to equity shareholder, or is this excess money and we are paying more to our equity shareholders? Deficiency or surplus is to be determined by preparation of list H. So that's with regard to how we prepare the lists, and I hope you understood so far. Now let's go further ahead and then discuss each of the lists in detail. Shall we? Just checking my laptop. Yeah, seem to have 29%. I can finish this video with peace. Chalo, let's start with lists now. In detail list. List A talks about assets not specifically pledged. And list B talks about assets specifically pledged. Now the question is, what are assets not specifically pledged? Or what is A and B? Assets which are not locked. Assets which are not locked. They are not under any encumbrance. Yeah, not under any encumbrance or not pledged. Assets with no charge, no encumbrance. not pledged anywhere, or not given as guarantee to any of the loans that you've taken. Yeah, not given as guarantee. Not given as guarantee. Meaning, as a company, whenever you take any loan, you have not pledged this asset to take loan, or you have not given this asset as an encumbrance to take loan, or you have not given this asset as guarantee for such loan that you taken. Such an asset is called as assets not specifically pledged. Against this asset, no outsider has any right. So company is at willful freedom to sell this asset, dispose this asset to anyone at any price at any point of time. So these are assets not specifically pledged. If nothing is mentioned, we always assume that asset is not specifically pledged only. See this, all assets are not specifically pledged. It's specifically mentioned otherwise about charge. So starts with cash and bank. All of these are ANSP and it includes calls and annuals. That is money supposed to be received, notional call to be made from our shareholders. Then list B is asset specifically pledged. So these assets, no, we've given them as a guarantee for the loan that we've taken. We have created a charge against these assets, or we've given these assets as encumbrance against the loan that we've taken. Such assets is what we call as ASP. Though these assets are owned by company, though these assets are owned by company, let me write. Owned by company, but key or what to say, given as or so to say charge is created against loan taker. Charge is created for loan taken. So whenever we have created charge against this asset for loan taken, these assets, though they are with us, we can use them in our process, but we can't sell them. Why? These assets have been locked. I'm going to say the legal documents of this are with somebody else. Or sometimes even if the legal documents are with us, there is an encumbrance which will restrict us from selling these assets. So that's asset specifically pledged. Asset specifically pledged basically rules down to such assets which are owned by us but against which the control is there with a third party. The person who has given us money, he has the right. Without his permission, I can't sell this asset. And if I sell this asset, such money cannot be used for anything else other than first repaying his loan. So whatever the loan I have taken from him, I would have to repay that loan first from the proceeds of the sale of the assets. Only then I can use the rest of the money for whatever other liability settlement or other payments that I want to make. Got it? So this, my friends, is asset specifically pledged. What is asset specifically pledged? This will be specifically mentioned in the question. They will tell that a specific asset is ASP. They will tell below the asset. Building given as pledge for long-term loan taken. Stock given as guarantee for bank overdraft. So they would tell that. So whenever they specifically mention, then it is ASP. If they don't mention, then it is not an ASP. See, sometimes mention would be made alongside liability. They can either mention it alongside the liability or they can mention it alongside the asset. So two possible scenarios can exist. Number one, that asset is there, no, that asset value is more than the liability taken, or that asset value is lesser than the liability taken. For example, to take a loan of 1 crore, I can give an asset as guarantee whose value is 1.2 crore. Or to take a loan of 1 crore, sometimes I might have given an asset of only 80 lakhs as guarantee. Now, I'm sorry, I'm recording this at 12 o'clock in the night. So after a 10 hours of normal class that I've taken, morning 8 to evening 8:30. Now, of course, with 1 hour lunch break and 2 half-an-hour breaks. Sorry. Okay. Yeah. What I was telling is the value of the secured creditors need not be equal to the value of the asset. It can be more or it can be less. For instance, if the liability is 1 crore and the asset is 1 crore 20 lakhs, I'll sell my asset for 1 crore 20 lakhs. I'll repay the liability of 1 crore. So I'm left with 20 lakhs. So what would I do with this 20 lakhs? This 20 lakhs can be now used to pay some other liability in an alternate scenario. I have an asset of 80 lakhs. Against that, I have taken a loan of 1 crore. If I sell this asset of 80 lakhs and I realize 80 lakh rupees, I'll pay this against to my secured creditor, and I need to still pay 20 lakhs to my secured creditor. To that extent of 20 lakhs, what I didn't pay to my secured creditor, he would become my unsecured creditor. Meaning, is a creditor, person to whom we owe money, against which if there is no security, is unsecured creditor. If there is security, secured creditor. That's how it works. Have a look. Yeah, there will be specifically mentioned in the question sometimes below the liability two possible scenarios. Number one, secured creditors is less than assets. If secured creditors is less than asset, what will happen? Realization proceeds from sale of such secured asset is first used to pay secured creditors. After we pay secured creditors, whatever remains, what will they do? Surplus is added to realization account, realization from ASP, meaning asset specifically pledged is there. Surplus from sale of ASP is added with the ANSP realization, and together it will be used to repay liabilities. See, which will be used to pay other liabilities and shareholders. However, the sale of such asset specifically pledged, if it is insufficient to pay secured creditors, full realization will be paid to secured creditors, and secured creditors will now become your unsecured creditors to the extent ASP realization was not sufficient. See here, realization proceeds from sale of such secured asset is used to pay secured creditors. Unpaid portion of liability is no more secured. It turns out to be unsecured liability and it will be added to list E. What does list E talk about, boys and girls? Unsecured creditor. It will go to unsecured creditors. I hope you guys understood this. Did you? Fantastic. If I have to give you a small example, just have a look. Yeah, scenario one, secured asset is lesser than secured creditors. Let us assume this is to be 100 lakhs. Asset realized 120 lakhs. In this scenario, the 20 lakhs, whatever we have as surplus, can be used to pay other liabilities as well as shareholders. We can use this to pay other liabilities as well as shareholders. This is how it works with regard to the fact where secured creditors is less than assets. What if secured creditors are 100 lakhs and asset realizes only 80 lakh? Then that 80 lakh realization will be used to pay secured creditor, and balance 20 lakh of secured creditors will now become unsecured creditor. You remember in our images, we had one person who's thinking, Ayo Papa, that unsecured creditor that person is unsecured creditor, and that unsecured creditors will include this secured creditors to the extent unsecured. See here, I'll show you the image here. This person here, that thoughtful, confused person. That's with regard to list A and list B. And after list A and list B comes list C. What does list C talk about? Preferential creditors. There are three people who form part of list C. These people have preference over any other creditors. Before you pay any other unsecured creditors or debenture holders, you need to first pay preferential creditors. So who are preferential creditors? Three categories of people. Category number one, government. Category number two, laborers. Category number three, employees. So what is it? Government and tax authorities, laborers, and employees. So these are the three categories of people who fall in the bracket of preferential creditors. So have a look. Preferential creditors refers to the amount payable to government toward taxes any due for last 12 months only. Now just imagine you have some due to be paid to the government and this is for last 24 months, last 2 years. To the extent the due is towards the last 12 months, it will be preferential creditor. To the extent it is to a period beyond the 2 months, no, sorry, beyond the 12 months, no, it will be unsecured creditor. What if I owe 20 lakhs to government or tax authority, of which 8 lakh is for last 12 months, 12 lakh is for a period beyond the last 12 months. So then 8 lakhs will be my preferential creditor, remaining 12 lakhs will be my unsecured creditor. I hope you guys got this. Next, with regard to laborers and workmen. So salaries or wages for a period of maximum 4 months within last 12 months. Within the last 1 year, for 4 months, whatever is there is preferential creditors. If there are 5 months of salaries due in the last 12 months, then to the extent of it belonging to 4 months, it will be my preferential creditor. For 1 more month, that is beyond that 4 month period, that 1 more month will be my unsecured creditor. Or if there is any compensation due, work compensation, leave travel compensation, or any workman compensation, ESI, pension, gratuity, all of this, no, completely it will be preferential creditor only. Yeah, so remember this. According to definition of preferential creditor, it would also include liquidation expense and liquidators remuneration. Those of you who already done this chapter and are also watching this video will say, sir, preferential creditors includes liquidators remuneration. It includes liquidation expenses. Why didn't you include? We are now doing statement of affairs. When statement of affairs is prepared, liquidator is not yet appointed. First statement of affairs is prepared. It is put across in the board meeting. The same is accepted, also submitted to the court as a copy. Then the liquidator is appointed. He will get his appointment order, power of attorney. He will receive statement of affairs. Then he will go through the process of liquidation, during which there will be liquidation expense, because of which you will get liquidator's remuneration. So at the time of preparation of statement of affairs, liquidation expenses is zero, liquidator's remuneration is zero, and that will not be included in preferential creditors when we prepare list C. And this is the reason why you should first learn statement of affairs, then you should learn liquidator's final statement of account. You cannot do like I'll first read liquidator's final statement of account and then come to statement of affairs. Do you get what I'm trying to tell? Okay, so I hope you guys are appreciating the order and the reason why we're following this order in the studying process. So see, however, it would not be included in statement of affairs. It will be considered in LFSA only, liquidator's final statement of account only. Got it, guys? Great. Then comes list debenture holders. So a debenture holder can be actually two types. Remember this. It can be fully secured, or I can write better, fixed charge, floating charge. Fixed charge and floating charge. Now, the question that I have with me for all of you is it mandatory that a debenture should have fixed charge? The answer is no. All the debentures have floating charge on the assets of the company. But certain debentures can have fixed charge. If in case debentures have fixed charge, they will not come under this listed E only. They would come as, what to say, asset specifically pledged. What to say? This will come in list B, secured debentures or secured creditors. However, if they have floating charge, only then they will come under list D. Meaning they have floating charge on all the assets of the company. They have floating charge on all the assets of the company. That is the time when it will come in list D. If not for that, it will always be part of our list B. List B is secured creditors. You get that? So these debenture holders have right on the assets of the company, not specifically one, but on all the assets. So if somebody has specific charge, first you need to pay them. Then you need to pay someone who has floating charge. But before these two comes government employees. You got that? Yeah. So debentures usually have floating charge on all the assets. If nothing is mentioned in the question, debentures will come in listed you all by itself. Yeah. Debenture holders. What all are they entitled to at the time of liquidation? These debenture holders are liquidated to, I would say, are entitled to nominal value of their debentures. They are entitled to premium on debentures if any promise at the time of issue. They are also entitled to any debenture interest till the time the amount is paid to them. Not till the liquidation date, but till the time the amount is paid to such debenture holders. So these are the things that they are entitled to and they'll be paid to in list D. And after that we have list E, that is unsecured creditors. So what do we have in list E? Unsecured creditors. These are the people who are thinking, will I receive money or will I not receive money? Yeah. So list E will have certain creditors who have given money to the company or who have given goods to company or rendered service to company without any security. What is it they've done? They've given goods or they've given loan to company without any security. So they have to receive after such people who have security in specific, after such people who have preference, and after such people who have floating charge on all the assets of the company. Only after all of those people, unsecured creditors will get their return. Got it? Okay. So unsecured creditors will include genuine unsecured creditors who have given money without any charge, or preferential creditors to the extent not preferential, or secured creditors to the extent not secured by the assets. All the three category people will come in unsecured creditors. Got it? So unsecured creditors में होना will come creditors without any security like trade creditors, secured creditors in excess of assets specifically pledged against them, and preferential creditors to the extent not preferential. See, dues to government which is not preferential, and dues to workmen and employees which is not preferential, meaning the tax dues or other dues to government beyond the period of 12 months, or wages for a period longer than 4 months in the last 12 months, that will all be list D, that is our unsecured, sorry, list E, that is our unsecured creditors. Company, after it pays liabilities with secured charge, that is secured creditors, after it pays preferential creditors, then people with floating charge, debenture holders, then list E unsecured creditors. If the money is left among the members, the first person to take the money is preferential holders. They'll say first me, then you pay the dividends. They come running, hey, money is left, I want my money. You get that? So preferential holders, what and all will they get? Preferential holders get paid up value of their share, like face value is given to debenture holders, paid up value preferential holders can take back. They also get arrears on the preference dividend whatever they paid. If these preferential holders have been not given their dividend, they can claim their arrears of preference dividend, not till the date of liquidation but till the date of payment. Assume that the company moves on to liquidation today, but by the time they pay preferential holders it's another 3 months. For such period of 3 months also, at the pre-agreed percentage on the face value, preferential holders can claim their dividend. The company can pay, no one will stop. And company can also pay premium on redemption if it had promised so at the time of issue of such shares. Got it? So this is the extent to which preferential holders are paid. So this is list F. After you pay money to preferential holders, then finally comes the turn of equity shareholders. If there is any money left, equity shareholders will say, "Sir, please pay me. I will take." You get that? So equity shareholders are paid any balance sum remaining after paying all other liabilities. What does equity shareholders do? They take balance sum remaining after paying all the other liabilities. Got it, guys? That's it. And whenever you're starting to pay equity shareholders, there are three scenarios. Number one, the amount payable and the amount available will be equal. Meaning you need to pay 1 lakh to equity shareholders. You have exactly 1 lakh remaining. Is that possible? Impossible. Impossible. But still pay it off. Pay it off. This is the kind of exact expression that you'll have on your face. How come it's equal? So if it is same, that is what? Amount available and amount payable are same. Pay, all happy, nobody is sad here. Amount available, amount payable. Yeah, preference shareholders are also happy because equity shareholders are not getting more money. If equity shareholders get more than the nominal value, preference shareholders will be upset, equity shareholders will be happy. Here all happy. Equity shareholder happy, preference shareholder happy, liability, all the other liability people happy, everyone is happy. Pay, close it. However, usually that will not happen. There will be either more money or less money. Let's first see the happy scenario. More money. Amount available is 1 lakh 20. Equity share capital is 1 lakh. Lucky equity shareholders will get more money. Equity shareholders will get more money. Amount available will be greater than amount payable. What is it? Amount available will be greater than amount payable to equity shareholders. You get this? And this is what we call like paisa hi paisa hoga, paisa hi paisa. That's the point. So this is the very remotely possible, but such excess money is called as surplus. And I hope you all got this. That's the extra money that we pay to our shareholders. Got it? But usually what happens, but majority of the cases may, the amount available might be slightly shorter than the amount payable. And that is what we call as deficiency. See this? Sad. Pay what is available to equity shareholders. What we could not pay is called as deficiency. And what we compute here no, as surplus and deficiency. This can be cross-checked or cross-verified by preparation of list H, that is deficiency or surplus. What is it? List H, that is by preparation of deficiency or surplus. Lot of them what they do is whenever we do problem, we prepare list A, B, C, D, E, F, G and then prepare list H. I would say, though this is a statement and not an account, though this is a statement, I will see if I can run this video. So, though this is a statement and not an account, we would still be preparing this statement in dual aspect concept. So, simultaneously, when you're doing list A, list B, list C, list D, list E, we will also be doing list H. And at the end of list H, whatever the deficiency surplus what we find should match with the deficiency or surplus what we find in list G. And that, my friends, is introduction to statement of affairs. In the next video to this series of videos on liquidation, I would show you the format of statement of affairs and also run you through a problem on statement of affairs. So hoping to see you all in that session, the follow-up session on liquidation, wherein we'll see the format of statement of affairs and also see a problem on statement of affairs. Till then, remember life is not a battle to be struggling, it's a game to be enjoyed. Till the time you're learning something, you're having fun. It's all good. The day you guys either stop learning something or stop having fun, trust me, you might start struggling because you might be in a battle. So thumb rule to stay happy is pretty simple. It is to stay in the game. So one last time on this day, I have just one simple question for all of you. Are we in the game? See you all in part 2 to liquidation of companies. Till then, tata bye bye, take care and have a great time. Don't forget to stay in the game.